Are you ready to avoid common investing mistakes? Are you tired of damaging your returns and jeopardizing your financial goals? The good news is you don't have to make these mistakes anymore. Warren Buffett, one of the world's most successful investors, has shared 10 buckets of timeless investment advice that can help you sidestep common traps and achieve your financial goals. Are you ready to learn from the best and start making smart investment decisions? Join us as we explore Warren Buffett's 10 buckets of investment advice and discover how you can avoid common investment mistakes and reach your financial goals. Invest in what you know. Avoid complex investments with Warren Buffett's wisdom. Warren Buffett advises investors to only invest in what they understand and nothing more. It's easy to make avoidable mistakes when getting involved in over-complex investments. Stick to industries and companies that you have direct experience in and a strong grasp of. If you cannot understand a company's business and the factors that impact its industry within 10 minutes, it's best to move on. There are plenty of simpler options out there. Avoid the technology sector and stay within your circle of competence for successful investing. As Peter Lynch once said, never invest in an idea you can't illustrate with a crayon. Follow Warren Buffett's wisdom and stick to investments you understand for better returns. Invest in high-quality business, the key to Warren Buffett's success. Warren Buffett focuses on buying high-quality companies with long-term growth opportunities. He has learned from past mistakes, such as his investment in the textile manufacturing company Berkshire Hathaway, that bargain prices aren't always the best deal in the long run. It's better to invest in a wonderful company at a fair price than a fair company at a wonderful price. One important financial ratio to gauge business quality is return on invested capital. Companies with high and stable returns on invested capital have the potential to grow faster and create more value over time. Instead of settling for a high dividend yield or a low PE ratio, focus on the business quality and ensure it meets your standards. Time is the friend of a wonderful business and the enemy of a mediocre one. Follow Warren Buffett's approach and invest in high-quality businesses for better returns. Buy and hold forever. The power of long-term investing, according to Warren Buffett. Warren Buffett believes in the power of long-term investing, with a favourite holding period of forever. If you're not thinking about holding a stock for 10 years, don't bother owning it for 10 minutes. Quality businesses earn high returns and increase in value over time, and it takes patience to see the fundamentals impact the stock price. Trading activity is the enemy of investment returns, and only patient investors are rewarded. The stock market is designed to transfer money from the active to the patient. So buy right and sit tight for better returns. Follow Warren Buffett's approach and embrace the buy and hold mentality for a successful investment portfolio. The stock market is designed to transfer money from the active to the patient. Warren Buffett. The Dangers of Over-Diversification. Why less is more, according to Warren Buffett and Charlie Munger. Warren Buffett and Charlie Munger believe in the dangers of over-diversification. They invest with conviction behind their best ideas and focus on high-quality holdings. Warren Buffett's latest position is around 40% of his portfolio, and he invests in a much smaller number of stocks that meet his investment requirements. Excessive diversification can dilute the impact of high-quality stocks and make it difficult to keep track of current events impacting the portfolio. Diversification is a protection against ignorance, but for those who know what they're doing, it makes very little sense. Charlie Munger sums it up as, the idea of excessive diversification is madness. Consider slimming down your portfolio to focus on your highest quality holdings if you own more than 60 stocks. Follow the wisdom of Warren Buffett and Charlie Munger and invest with conviction. Most financial news is noise, not news. Ignore the chaos and focus on the fundamentals that matter. Warren Buffett argues that 99% of investment actions should be based on just 1% of financial news. Don't let the market's manic depressive behaviour and the media's sensational headlines drive your investment decisions. Stick to high-quality companies with a proven track record and ask yourself if a news event truly impacts the company's long-term earnings power. If not, consider buying the stock when others are selling. This is key to successful investing. Investing isn't rocket science, but there's no easy way. Investing success isn't about having a high IQ. It takes more than intelligence to beat the market and avoid behavioural mistakes. There's no formula or easy button that can guarantee market-beating returns. Be wary of gurus selling a hands-off, rules-based system. Investing is a challenging art that requires critical thinking and can't be made easy. As Charlie Munger says, if it were easy, anyone who found it easy would be stupid. Price is what you pay, value is what you get. Don't confuse stock price with business value. Stock prices can be volatile and influenced by emotions, but a company's future earnings stream may not change. As long-term investors, focus on buying high-quality companies at reasonable prices. Don't fall for the trap of stock prices. Distinguish between price and value. Investing in the stock market is not about making quick profits or finding the next big thing. It's about growing your wealth over time by investing in quality businesses that have proven their worth. Instead of trying to find the next big winner in an emerging industry, it's often better to invest in companies that have already established themselves as leaders in their respective fields. These companies may not be the most exciting, but their slow pace of industry change often protects them, and they can provide stable returns over the long term. Warren Buffett agrees with this approach. Find quality businesses that will grow in value over time, like the dividend aristocrats and kings, instead of trying to find the next big winner. Boring is beautiful in investing. Warren Buffett. Closing thoughts on Warren Buffett's investment advice. We often make investing harder than it needs to be. Warren Buffett follows a simple approach rooted in common sense. We can relate to his investing tips having worked in the industry for over a decade, but that doesn't mean they are always easy to follow. We hope you enjoyed this video. Don't forget to hit that like and subscribe button and leave a comment below about which advice you can agree the most. Stay tuned for more amazing financial content. See you in the next video.